Welcome back, folks, to Investor Diaries. Lightspeed Commerce stock has been on a downward spiral for the past several months. It's now trading at its 52-week low after hitting its all-time high just a few months back. The company's problem started when a short seller put out a report accusing it of dubious accounting practices. Thereafter, the company released its earnings, which, yes, beat on revenue, but badly missed on EPS.
So clearly, this has been a highly volatile time for the shareholders of LSPD. Given everything that has happened, should you, as an investor, invest in the company? Do the existing shareholders sell, hold, or buy even more? Let's find out in today's video.
Alright, so very quickly, what is Lightspeed? Lightspeed Commerce Inc. offers omni-channel, commerce-enabling software as a services platform. The company's software platforms provide its customers with functionalities to engage with consumers, manage the operations of a business, and accept payments.
Lightspeed Payments is a payments processing solution, and their other arm, Lightspeed Capital Financing Solutions, enables merchants to buy inventory, invest in marketing, or manage cash flows by providing financing. So what's happening to Lightspeed stock? Currently, it is at its 52-week low. It had reached a high of $130, and then it has been on a downward spiral ever since the short seller report came out.
Okay, so what is the short seller report all about? Spruce Point Management, an American short-selling investment firm, has put out a lengthy 125-page report on Lightspeed Inc., in which it has alleged that Lightspeed as a company has covered up massive inflation of how many customers it has, how much money it makes from them, how much growth potential it has, and a lot of other associated factors.
After conducting a forensic financial and accounting review, Spruce Point believes that Lightspeed Commerce has covered up massive inflation of its total addressable market, or TAM. Spruce Point questioned Lightspeed's revenue quality given numerous changes to the definition of average revenue per user, or ARPU, its resilience to revenue loss and improvement in DSOs even during the peak COVID-19 crisis, while its restaurant and retail clients were pressured, along with other subtle accounting changes. All this led Spruce Point to really question Lightspeed.
Like, folks, we are not saying that we know whether the report was right or wrong, but think about it this way. At the height of the pandemic, when we thought that restaurant numbers are going to slow down and so would be other retail numbers, we saw that Lightspeed was doing really well.
That's right, Appy. So this really makes us question, right? Because maybe Lightspeed is actually doing well, but what are the chances when their clients are getting hit, their revenues are not getting affected?
So what happened after this? The company was quick to respond, but viewers, make a note of the response by the company and you will see that not a single specific allegation has been countered or answered in a very specific way.
So immediately after the short seller report, the company came out with a press release, which read, "The report contains numerous important inaccuracies and mischaracterizations which Lightspeed believes are misleading and clearly intended to benefit Spruce Point, which itself has disclosed that it stands to profit in the event that the stock price of Lightspeed declines. Lightspeed cautions investors not to make decisions based on this report and instead strongly encourages them to consult credible sources, including Lightspeed's filings with Canadian securities regulatory authorities and the US SEC prior to making investment decisions."
Alright, so in response to the 125-page report, Nidish, that was one statement the company made, and they didn't address it subsequently in, say, media houses, news channels. The only time that they came close to speaking about it was during the Q2 results analyst call.
And in the analyst call, the CEO mentioned, quote, "First, since becoming a public company, we've always been consistent in how we account for revenue. Second, we have been transparent with the definitions of our key performance metrics, including ARPU, GTV, and customer locations throughout our history as a public company. We firmly believe that our KPIs allow investors to measure our operating performance and identify trends in our core business that may not otherwise be apparent with relying solely on IFRS measures.
Now, Nitish, this is my exact problem. They were not specific when the short seller report came out, and they were not specific when they were addressing the analysts. I would have been very happy to see the CFO actually say, okay, this was our definition of ARPU 3 years back, and we have the same definition, or say that, hey, we've changed the definition once, this was the definition, and this is the reason why we have changed it.
Like, they could have been more transparent about what it exactly was and what it is today, and what were the reasons behind some of the changes, right? And not just with ARPU, there were discrepancies with GTV and customer locations as well, and that would have gained further credibility from all the investors or the existing shareholders as well.
So, notwithstanding all of the factors mentioned, what were the actual results in Q2? So Lightspeed had total revenues of 133.2 million, which is an increase of 193%. The subscription revenues of 59.4 million, which is an increase of 132%. And then transaction-based revenue of 65 million, which is an increase of 320%.
They reported a net loss of 59.1 million as compared to a net loss of 19.5 million in the previous quarter. Adjusted EBITDA loss was reported as 8.7 million, representing 6.5% of revenue versus 6.2% in the previous quarter. For the fiscal 2022, Lightspeed projects a revenue of $520 to $535 million and the adjusted EBITDA loss of approximately $40 million to $45 million, which represents approximately 8% of its revenue.
So what does it leave us with? So we are not saying that this is the only company that has not responded to allegations that have been leveled against them. Sometimes it is in the company's strategy to just keep quiet. So let's look at what is the future for this particular company.
The small and mid-sized business market for omni-channel innovation is large and with a very low cloud adoption rate. Lightspeed says that the total addressable market is 6 million complex small businesses, restaurants, and hospitality establishments. However, it's still not clear how Lightspeed stands to take advantage of all this total addressable market.
Additionally, Lightspeed says that its platform has advantages for complex needs such as cloud point of sale, e-commerce, and payments. However, this field is so crowded that it is very difficult to believe that Lightspeed will emerge as a winner in this race.
So, what is Investor Diary's recommendation? At this time, based on our analysis, we are not very confident in investing in this company. Jim Cramer, the host of Mad Money, has covered Lightspeed in detail. In this show, the CEO Dax da Silva appeared when the company was really doing well and gave an overview of the company. However, after the short seller report came out, Jim Cramer reached out to the company and the company declined to respond to his comments. Now, Appy, that sort of confidence should be telling of where the company stands and should the investors really buy or not, right?
Yeah, so from an investor standpoint, I would be interested in knowing what the CEO or a top executive of Lightspeed actually feels about the company, its future prospects, the short seller report. But unfortunately, we didn't hear anything about it.
And especially on a show where the host had given glowing reviews about your company previously, you would definitely want to come back and keep that momentum going.
That's certainly very concerning to me, Nitish. And actually, if you look at the results of Lightspeed, yes, the revenues grew quite a lot, but the costs also increased to concerning levels. The ever-widening net loss is a major concern, specifically when you look at the steep costs that Lightspeed paid for some of its acquisitions.
So the dismal performance of the company, combined with the short seller report and the company's lackluster response to the short seller report, should be concerning. We would recommend to stay away from the stock for the time being and let the dust settle and let the company start putting up some impressive numbers before we revisit this stock.
And that's a wrap, folks. Do let us know what you think about Lightspeed stock in the comment section below.
And until next time, stay tuned and stay focused.
Thank you.
Thanks.